Hi, Clark Harvey here, the BBQ Mortgage Guy, owner of First Rate Mortgage. I've been serving clients for over 22 years in both residential and commercial lending. Today, let's talk about the loan estimate, or formerly is known as the good faith estimate. So that's something you get when you want a quote from a lender. They're going to send you that loan estimate, kind of gives you the breakdown of the rate, whether it's locked or not. So let's talk about that. So you look right up here, we got a date. It's going to have your name right up here. Like I said, I took out the personal information, property address, the estimated value, and what type of loan term is it? This one's a 30-year fixed. It's a refinance, this particular loan estimate. And it's going to tell you whether it's fixed, conventional, FHA, VA, what type of loan is, and have your loan number assigned and whether it's locked or not, yes or no. It'll tell you, if yes, what the expiration date is for lock. And it's going to show your loan amount, the estimated loan amount. Now just know that on refinance, we're estimating a lot of these, so that may change the process, and that's okay. So we just stay in communication with you as the client to see if that's what you want. And this particular rate was locked at 3.875 on a 30-year fix, and it gives the principal and interest payment right here. And it tells you whether these amounts can increase after closing. The loan amount after closing cannot increase. Interest rate cannot increase, nor the monthly principal and interest. Does it have a prepayment penalty? Yes or no? This one does not. Does it have a balloon payment? No. So it kind of gives you the years of 1 to 30, what the principal and interest will be, estimated escrows. So that pays your taxes and insurance in the deal. Sometimes it has mortgage insurance, depending on the loan. This particular one, let's see what it has. It has just property taxes and homeowners insurance, and it is included in the escrow. So that means when you make your payment every month, when your taxes are due, depending on the state you're in, they'll be paid by the lender, and they'll have enough funds in there to do that, as well as the homeowners insurance. When that comes due, they'll take care of that payment as well. So when you make your payment, it's all paid inside. So this particular one shows estimated closing costs about $9,753, includes $6,899 in costs, and there's probably some credits in here. Estimated cash to close, they're estimating about $1,274 at this point of cash that you're going to need to bring to the closing table. And again, this can be adjusted as well throughout the process. You just need to communicate. So we like to do that all up front and make sure everyone's happy. This particular one was locked with some points, or discount points as we call them. It's a fee that goes directly to the lender for the cost to get that rate at that time that they locked it. And it also included an underwriting fee. Some of them get waived, some don't. So this one has an underwriting fee. And let's go to box A right here, which is what we're in. If there's an origination fee going to the loan officer, that will be in here as well. It doesn't appear that that is happening. And these go down to box B, services you cannot shop for. An appraisal. We have to go through an appraisal management company. We put your credit card information in and we order the appraisal, and that's all we get to know. We'll get an email notification of when it's set up and then when it's completed. We don't even know who the appraiser is. So this particular lender charges about $480, and that's what they're disclosing this cost. Credit report fee, their loan asset, about $75. Now just keep in mind it's an estimate, so we're going to estimate high, because what happens is the government says, hey, if you underestimate these at the front and they're higher at the end and they are over the certain tolerances based on the boxes that they're in, then that comes out of the loan officer. It's what's called the cost to cure. It comes out of the loan officer's commission. So we're going to overestimate some of these, and then once we get to the closing disclosure, that'll have all the final numbers on there. This particular lender charges a flood certification fee, a tax service fee, and there is a processing fee for this as well. Box C, services you can shop for. The title company. This particular title company, they're estimating these fees right here. And so box D adds A, B, and C up, which is about $68.99. And in box C, this just talks about a recording fee. And box F are prepaids. So that means setting up the escrow account. So we have to fund it with enough money so that will go towards the escrow account. So again, we talked about earlier, taxes and insurance being paid. That's what that's being set up as. This is the initial escrow payment that we're going to collect this particular client. 6 months, $120.50 their homeowner's insurance is. So they're going to collect $723. And then property taxes are estimated at $225 and for about $1,800. And so we add E plus F, G, and H. It gives us about $2,874 for a total of $97.53. So oftentimes consumers get this number right here, this $2,854. They kind of add it as in a cost and all here, which it is. But just know on a refinance, you're going to get escrows back, whatever's in your escrow account at the time of closing 30 days after funding from the current lender. So it kind of offsets a lot of these costs. So the hard costs, as we call them, are right here. Title fees, B, so A, B, and C are your hard costs of the loan, and E as well. The others are prepaids, the escrows. There's still costs, but you just know that that's your money. The others are an actual cost to do the loan. There is a difference. So this one right here, estimated cash from the client, $1,274, and this is estimated cost financed into the deal, into the loan. So every deal is a little bit different. Some are more, some are less, depending on the situation. But like I said, it is an estimate, so keep that in mind. That is the big thing I want to remind the clients is it is an estimate. We are estimating these fees. We have to give you something to go off from, and then they can be updated to the process. This particular one right here shows kind of a comparison, an APR on this one. The rate was 3.875. So the lower that APR is to the interest rate, that means you have a great deal. If it's less than an eighth higher than the interest rate or thereabouts, that's a great deal. So total interest percentage, the total amount of interest that you'll pay over the term as a percentage of your loan. So an APR, again, we've talked about this before, is just a means of estimating costs. So for example, if you got a loan estimate from lender A, which is us, and lender B, and they had the same rate, same loan amount, all these things looked fantastic, but say they had an APR that was 4.2. Well, just know that their costs are going to be higher. That's it. That's all an APR is. It's just a way for the consumer to find out quickly how that cost is higher from lender A to lender B, or however that looks like. And it also talks about the appraisal in here. Whether this loan is an assumable loan. Typically, VA loans and FHA loans are assumable. They have requirements that come with that. Typically, conventional loans are not assumable. ARM loans can be assumable, but it depends on the loan again. Homeowners insurance is required on the property, so we have to get that ahead of time. It talks about late payments, liability after foreclosure, kind of gives you some more information, and whether they intend to service your loan or not, meaning when the loan is closed, are you going to make the payment to this lender or to someone else? Or are they going to sell it? They're going to transfer it. So all that information right there is very helpful. Feel free to reach out to me if you have questions. Website is clarkharvey.com or thebarbqmortgageguy.com. That's bbqmortgageguy.com. Certainly be reached at 801-562-9100. If you have any questions, we're happy to help. We have a whole team that can help, and we look forward to serving you in the near future. Have a great day.
You've been listening to Clark Harvey, the Barbecue Mortgage Guy. Clark is a licensed mortgage loan originator, NMLS number 240452, and his company, First Rate Mortgage, NMLS number 1172332. You can get a hold of Clark at area code 801-562-9100 9100 or at his website at www.thebbqmortgageguy.com.